This is the line in the sand for Bitcoin's macro trend. Hey guys, it's Keith Allen. Hope you have navigated the last 24 hours well, to say the least. We had a great live stream yesterday, man. Really appreciate everybody who joined and everybody who participated. Today's not going to be as long as yesterday. We have pretty much a singularly focused topic to discuss today. Yesterday was a much broader analysis, but we're at a critical level, and I want to make sure, even though it's late in the day, at least for me, I wanted to make sure that you guys are aware of what I'm watching and what you should be watching as price action develops here through the week, and really right into the tonight's close, which is coming up pretty soon, actually, in about an hour and a half, a little less than an hour and a half. So we're going to get into it pretty quick. Before we do, as per usual, let me just welcome anybody new who might be joining us. I always, man, I really, I can't tell you how much I appreciate the OGs for coming back and contributing and joining me time and time again. And for anybody new, welcome. My name is Keith Allen. I'm a full-time trader. I'm a work-from-home dad, and I'm co-founder of Material Indicators. Glad to have you with me. On the stream today, we're going to talk about this singular level that I'm talking about, the line in the sand that really separates whether we are going to continue the bull market or if we are headed to Bearadise. All right, so that's what we're going to climb into today. Live chat is open as always. It's always better when you guys contribute. So by all means, please, if you have questions, ask them. I'll do my best to answer them. If you have insight, if you have data, if you have theories, if you have answers, share them with us. Okay, we all grow together. So please do me a favor and don't be shy. Join me for that. And of course, if you haven't done so yet, do me the other favor of smashing some buttons and helping me grow the channel. I would really like to have the X channel up to the personal channel up to 5,000 by the end of the year. I'm really kind of shocked that I'm not there, and I want these YouTube channels to grow as well. And you guys can help me by simply smashing that like and sharing it with somebody, a friend who trades, or maybe one of your communities that you engage in. And also, of course, for yourself, make sure you hit that subscribe button so you don't miss any of the future streams. I drop the alpha for free on the regular around here, so you're not going to want to miss any of it. So let's climb right in, and we're going to start with the candle chart, okay? And gosh, we're right here retesting resistance again here today. So this is a perfect time to be doing this. All right. Let's share this one. It's right there. Beautiful. Look at this. Here we are. I mean, there's no even preamble here. We're right at that level right now, like sniffing at it. So we're going to get into this. And like, what's happened in the past 24 hours? If we clear this, people are going to freak out because I know a lot of people have been shaking out here over the past month, and certainly in the past 24 to 48 hours, it's been pretty nasty here, right? And this is a key reason why. Okay, we lost a number of levels here, all right? And if we go to the weekly chart, we can see we lost the 50-week moving average, and that's the one that everyone's talking about. We talked about that in depth yesterday. We talked about it in depth a couple weeks ago, right, when we were flirting with it before. And everybody was excited that this one recovered, and then it, of course, broke down. And so we lost the 50-week moving average. We wicked through the trend and through the yearly open. And now you see on this weekly candle, we are again flirting with both the trend line and the yearly open. And so if we take this down to the daily time frame, you can see these a little bit more granularly. And you can see that we are literally at this level right now. These are timescape levels. And these timescape levels, if you're new to the stream, you may not be familiar with this. This is one of our this is really the latest indicator that we've released at Material Indicators, and it is marking quarterly opens and the first week of each of those time periods. And of course, within the quarter is the yearly open. So here we are, January 1st, 2025. Here's our yearly open. It was at 93,347. Price right now is less than $100 away from that. And this is, for me, my line in the sand. And it's not a matter of, well, gosh, we're below it now and we're wrestling with resistance here, so it's over. This is something, we're talking about a macro time frame here, right? We're talking about the macro trend. So it's not whether we wick below it. It's not whether we get a close below it on the intra-week. I want to see this by the end of the week, by the weekly close, in the most perfect scenario you could ask for, or the most bullish scenario you could ask for, would be reclaiming the timescape level and the trend line and the 50-week moving average. But let's not get greedy, right? If we could just take it one level at a time, I'm okay with that. Because before we can talk about reclaiming this 50-week moving average, we've got to talk about reclaiming this yearly open, and then reclaiming the trend line, and then working our way up these moving averages. Okay, that's when we get back to price discussion. Not until we clear this 21-week moving average, right? Do we get back to price discussion? And so, what are the forces at work? The forces at work have not changed. We got a bit of a relief rally today after yesterday's dip down into the sub 90K level, 89,189. That was pretty nasty. I'm not going to lie to you. And it shook out a lot of people. It shook out so many people that if you scour through the X platform, you're going to see a bunch of so-called influencers who are tapping out, right? They're like, okay, I'm done. I can't take it anymore. I've been doing this for 3 years and I broke even. I'm done. Or I saw a headline come across my newsfeed, didn't verify it, but saying that Andrew Tate has tapped out of crypto, and he's got nothing. And so personally, I applaud that. Thank you very much. I don't wish the wrecking on anybody, right? I don't want anybody to lose money. It's the nature of the beast, obviously, but I don't wish that on anybody. But there's so many noisemakers and engagement farmers and self-proclaimed gurus out there who just talk shit. Moon boys. Every day you see that, tomorrow is going to be the biggest uptrend you ever. Tomorrow's going to be the start. December is going to be the start of the biggest bull run ever. No, it's not. It's not. Okay. So all of those people, I'm happy to see them go. These are the flushes that we need. This is what the market needs. Okay. Get rid of them. Good riddance. Goodbye. Bye, Felicia. Right. Don't need any of them. So I'm not going to take time to scroll through and find all these guys. But trust me, you'll see that. Oh, look at this. Billionaire Eric Trump said Bitcoin's going to 250K in the next 45 days. Tighten your seatbelts. Guess what? Bullshit. Don't believe the hype. Don't believe it. I've seen the same post from, allegedly the man with the highest IQ in the world. Okay? But this is just a copy of that from some dude who has 23,000 followers. Okay? So just don't buy into this. Don't believe this kind of stuff. Look at the charts. The charts are going to tell you everything you need to know. What you need to know right now is that Bitcoin price is struggling, but not done, right? We're certainly in the hunt here around this 2025 open. And if we can reclaim this, listen, just to keep the possibility of the trend alive, you got to reclaim this. Simple as that. And it's okay if there's some consolidation here, because consolidation builds strength. In fact, when we were building this structure here, and I'm going to take I'm going to take all the indicators out just so we can have a clean look at the structure here. I'll even switch off my beautiful moving averages here, just so we can look at what's actually here. Okay, as we were making these moves up, All right, 69K was the 2021 top. And I had stated at the time that, when we had all these giant moves, they were straight rips and there was no retest, and that was scary to me. And so when all of these things were happening, I said we got to have there has to be some consolidation. There has to be some retest and support. It's the only way to build foundational strength in the chart. And so you can see where that has happened, right? You can see where it happened here in the 25 to 30K range. This was really the validation and the breakout for the move here. This structural shift here at the mechanism. And we had a straight rip up, and we had some consolidation. We got a little bit more strength in the structure here. Straight rip up, very little bit here in the 50K range. Straight rip up, and then what? We spent how long? Okay, this was before, and this is what screwed up a lot of people. We made an all-time high before the halving, and like the market was aghast. That's not supposed to happen. It's never happened that way. Well, it did. Okay, whether it was organic or whether it was manipulated doesn't matter. It happened. It is what it is, and so that threw a lot of people off. And then we got past it, and everybody forgot about it, right? But look how much time we spent. Okay, that was from beginning of March 2024 until November 2024. So April, May, June, July, 8 months. 8 months of consolidation here. So for me, this is the strongest structural support level in the chart right here at that 2021 top, 69K. And yes, it does actually, there's potential, there's a chance that if bulls fail to reclaim this, that things could break down that much. Are there levels in between that could hold us? Absolutely. Look, here's consolidation right here at the 91 to 86 range. If we flip the timescape levels back on, we're going to see a few other levels that might come into play here. I would say that, and we talked about this yesterday. If you missed it, a really in-depth analysis yesterday. I encourage you to go check that out. So, Sonny says music is still on. Do you still hear the music? I don't still hear it, but let me check. Hang on a second, guys. I don't still hear it, but it's still there. That's weird. Sorry about that. President of so much winning. That is perhaps the best handle ever. That's fantastic. We're glad to have you with us, Mr. President. And sorry about the audio deal. I'm not sure why I don't hear it on my end, but nonetheless, let's get back into it. So let's just get back on topic here, right? So other potential landing zones, any of these timescape levels could be a landing zone. No question about it. This one here at 82.5 is interesting to me because we did have some good consolidation here. It's kind of like this was like there were two RS flip levels here. The lower level of that range was at 86.5. The upper level of that range was at 91.5. And of course, we had a little bit of consolidation here, and we had this double bottom. So these are really two levels that are very, very interesting to me in terms of a potential landing zone if things break down. And then, in my opinion, if we go this low, if we go as low as 75, then really this 2021 top comes into play to me. It's in focus. But what you want to see for things to how should I say rip back up and reignite the bull run, you want to see a higher low. Because we've already made, right? We're already a lower low here, losing this 98 level. So losing this timescape level here. So this is our next lower low, which is at 74.4K. So got to stay above this to have any hope. Uh, that obviously is a huge breakdown from here. So let's take a look at what that would mean. And I want to go ahead and put the moving averages back in, because that comes into focus here as well, right? So I talked about these breakdowns and where things land. These are also just happen to be, like in this case, this was a support test of that 50, which of course we've now broken and lost it, right? This was this was also a support test of that 50, which we've now broken down and lost. So we're now just about an hour and 10 minutes from the daily close. Again, it's not critical that it happens at the daily close, but I would not be surprised to see it happen before the daily close, just to jack some people up some more. Okay, so be mindful of this, and even if we do reclaim it briefly, this to me, I look for full candle bodies above these levels. So, like, somebody commented today that, oh, the bear market is already, has officially started. Well, listen, these are certainly bearish tendencies, no question, right? But there is no confirmation yet. We have not validated and confirmed that the bear market is here. We can speculate that it might be here, but we can also speculate that that it might not. And the reason for that is we don't have any confirmation yet. We have wicks. Look, this candle body, wick below the 50. This candle body, above and below the 50, above and below the trend line, and above and below the 2025 open, this timescape level. This candle body, okay, these are weeklies, by the way, also above and below the trend line, above and below the yearly open. So there's been quite a bit of that, especially over the past several days, right? Now to the daily time frame, 1, 2, 3, 4. We're now on the fifth candle flirting with these levels. And so what we need to see is a weekly close. Sure, daily close would be great. If we get the daily close above this, we obviously want to see the next candle body fully above it with no wicks below. That would be a sign of strength. Wick below, a sign of weakness. And so we're looking for those full candle bodies. Once we get to the weekly close, same set of circumstances, right? This is not a validator. This is an indecisive, looks like a doji candle forming here. And doji candles are notoriously indecisive. And so we want to see the next weekly candle fully above this 2025 open with no wicks below. And then we can listen, if we can consolidate above this level and climb our way back in. I'm not in a rush. I don't think this is going to happen before the end of the year. I don't think we could climb back above this before the end of the year, but I don't think we get to a new all-time high before the end of the year. And so all I want as someone who is macro long, spot long, no leverage, and in full transparency, I did de-risk a little bit last night. And in hindsight, I could say, oh man, I should have just waited. I could have got it better. Well, I had my level set. Okay. And maybe I need to work on where I set those levels. But I tend to set them because everything gets overrun, right? Because all of the technicals get overshot. That's just how the algos work and shake people out and stop hunt and all that shit. I try to go loose and be more a little bit, how should I say, a little less sensitive to stop hunts. And so I have, as I've shared with you guys a few times, I started building my position here. So my average entry price was in the low 50K range. So I took some money off the table last night, and it is now available to add more Bitcoin lower. And I did buy this. I did buy here at this yearly open. So, I've essentially sold everything that I bought above 100K. So everything I own now is was bought below 100K, and my average entry is now in the sub 50K range, which is fan freaking tastic. And now I got some powder to add to my position, and so I won't be upset if price drops a bit. I'm in it for the long haul. I'm holding that position. That is a Bitcoin hodl position, not a Bitcoin trading position so much. Um, so that's how I view it. Yes, you could argue, well, you should just sell it all at the high and just buy it all back. I'm trying to minimize my capital gains exposure, and I've been bit many times trying to beat the system. If you're trying to buy those absolute bottoms, I would suggest, which is very hard to do, by the way. And if you're doing it just on your own speculation and TA, good luck. You can win them sometimes, but you can't win them all. But it's not important to get it down to the bone, right? What's important is that you get it with enough meat on it to have a good upside and have good risk reward profile. If you would like a tool to help you with that, here's what I use. It's our mean reversion indicator. And it is hard to know if this is the absolute bottom, right? And it slides down. So the way I use this, I make very small entries and I dollar cost average them together. And you can adjust this based on the volatility. You can adjust this if you want to use it for tight scalps. You can go with a lower deviation. If you want to use it for longer term DCA strategies, you use a higher deviation. But nonetheless, if you average these together, this is a profitable trade already, right? I'm just going to ballpark this, right? Let's say that we bought here and here, that kind of averages right here, and then we bought down here and down here. So let's say we're averaging somewhere in, I don't know, this range. I'm just eyeballing it. You're already in a 3% profitable trade. And so I love this tool. It's it's the thing we've had the longest and I've used the most. I don't always have my bots on. And in fact, at the moment, I don't, just because of the way I'm trying to manage my capital. But this is a fantastic tool if you're interested in it, and anything else that we share. You can find links in the description. Also, of course, I'm watching liquidity here on Fire Charts. You can see that whales have come back in today since we hit that low around that 90K mark, and they've started buying back in. Now, does this mean it's on for sure? No, it does not, because these guys have been trading the range as well. And in fact, there's some divergence here between the brown mega whales and the purple whales. So I'm mindful of that as well. So these are the things you got to pay attention to. Ultimately, if we're watching the order book, we want to see more bid liquidity showing up, and we do see ladders starting to extend now lower down into that 75K range that we just talked about. And ultimately, what you want to see is like a block like this, which was over 250 million. You want to see a block like this concentrated here right below price, and that's what's going to send things up. That's when you're going to know it's time to rock. So that, in a nutshell, is what I'm looking at this stage in the cycle. And whether we get that weekly close above this or not, really, I think, is going to paint the picture of whether we are validating that the cycle top is in, or whether we are headed down to Bearadise. And if that would be both, right? That'd be the same scenario: cycle top in and down to Bearadise. But if we do clear this, and we start to climb our way back in, then we actually get to have a legitimate conversation about the potential of a super cycle. Because if history repeats itself, then this correction, if we go full bear, then this correction goes in the 40 to 60% range, right? And if we stay in if we're talking super cycle, then this correction is maybe in the 20 to 30% range from here, right? And how do I arrive at that? I shared this with you guys yesterday, but I'll pop it up real quick here. These are all of the times we've had those death crosses between the 50 and the 200 week moving averages over time. And so, excuse me, 50 and 200 day moving averages over time since the beginning, since Bitcoin's inception. And 100% of the time, it has led to a macro market bottom. And in those bear and those downtrends in those bear markets, it has gone as low as 70%. But in the uptrends, it's been as shallow as 5%, up to about, like I said, 20-30%. So you can see here, right? This was 20% dip, and we then went to an all-time high. So we were still actually in the bull here. You can see again here, this was 30%. We were still in an uptrend. This was a bit of an anomaly because of the whole COVID thing. But again, we were in an uptrend and 28%. So where are we at and these drawdowns are from the point of death cross, not from the local high. So from the point of the death cross, that gets us right here. We're only 18% into it. So if it were to go 20 to 30%, look where that gets us. Here's that 82.5 we talked about at 25%. Here's 28% at the next timescape level. That's a Q2 timescape. And then if we're talking, that 70K, 69, 70K level, that takes us a little bit deeper into the 35 to 40% range. So you just have to be mindful, and you have to be paying attention to these things. Don't listen to the first of all, don't speculate blindly. Don't follow anybody blindly. Look at the data. Simple as that. Look at the data and make those decisions. Verify what you're talking about, verify what you're looking at, and make your decisions based on what's in the actual chart. Kobe is asking, what are you setting MTF mean reversion indicator at? Great question. So this indicator this is so versatile. I love it because you can set it if you want to trade tight, just quick, tight scalps. You can set it tight. If you want to have deeper deviations and make bigger positions on deeper deviations, then you can do that too. I actually set up a grid of them. I don't show them all to you at once because it's kind of overwhelming to see all this on the page. But I have a bunch of different deviations set. The ones that are hitting for me on Bitcoin most recently are in the 1.5% range. Okay. This one is at 1.5%, and it's very easy to change. And let me just show you the easy way to set it up. So if you're a super easy way to set it up is to go ahead and build yourself a grid like this, right? You can open as many instances of this as you want on TradingView, and you can gauge the range. And incidentally, we're using this in 1 minute time frames, right? So this is a low time frame deal, and you can get a feel for where the asset is trading. And I can zoom out a little bit to get a little bit more view of the range on a 3 minute candle, but I still trade it on 1 minute. And you can see the number of signals I'm getting here at 1.5% versus what I'm getting at anything else. And I'm getting very little at anything else. So if you want to be more conservative with your, so here's 2%. There's only one signal here since November 4th in that 2% range. And you can see a lot more frequency happening here in the lower deviation level. And it's as simple as just going to those settings and making your adjustment here to, whatever number you want. Um, right? And if I took it down to 1%, I would see even more, right? So that's how that works. I got another one going on here. Okay. So you get a sense for how that works there. Hope that answered your question. If you have more questions on it, you can DM me in the community, and I will help you out. Be happy to help you out. So let me go back to the simplified version of this, so I don't lose anybody here. So are those 0 and 1 lines? Yeah. So this is based on a Fibonacci chart. So the bottom is 0 fib. The center, this is mean. This is 0.5 fib, and the top is 1 fib. This TP2 actually happens at like a 0.618 fib, just for what it's worth. Okay. So that is very simply, in a nutshell. Obviously, there's some other conditions in the algo, but in its simplest terms, that's how it works. Price likes to spring back to mean, whether that is above or below the line, right? So if the center line is mean, you can see how many times price snaps back to that level. You go up, it comes back to that level. You go down, it comes back to that level. And yes, it adjusts over time. So you need to have some risk management practices in place here to use this indicator. But if you find the sweet spot on this thing, it's fantastic. Now this volatility, this is my profile for Bitcoin. Might be different on something else. Like let's look at, let's just go with something popular and look at Solana. This is too aggressive for Solana, right? I don't want that many trades. So let's see what 2% looks like. Still, there's a lot. That's still a lot. Okay, so we get fewer. This is now at 5% deviation. So you're going to set it based on the volatility of the asset that you're trading in terms of finding your deviation settings. Again, hope that helps you out. I got tutorials for this on the Material Indicators website and on the Material Indicators YouTube channel. You can find them there. And again, if you need more help with it, just DM me and I'll be glad to help you out, because that's what I do. Hello, whoever you are. Glad to have you with me. My analysis is totally about technical trading. How about basic? Okay, that's fair. Mr. Nobody, you're somebody to me. So I'm going to give you I'm going to give you a very simple thing. And that's really where we started here. This is the simplest form of technical analysis I know of. Okay. And that is these timescape levels. And what's cool about this versus some of the indicators that you see on TradingView is there's no lag with it, right? You don't have to wait for anything to validate. As soon as we have that quarterly open, that level is printed until the end of time. It doesn't change. There's no repaint. It's there. It's solid. And so we can see it very, very simply. Is price above the timescape or is price below the timescape? And you can see right now it's been fighting for to flip this, but so far it's resistance. So this is very, very simple in my view. If that doesn't simplify things for you, and you have a specific question, I'd be happy to address that for you as well. But in its simplest terms, above these lines here, the timescape and the trend line gets us back in business, and then we have to reclaim this red 50-day moving average to really, like, once price moves above this level, which is at what, 109K, then I think you'll see things ignite and really boost the next leg up. Until then, I think we have a grind. I think we have some consolidation. That's the bull case, is some consolidation. The bear case is breakdown. And be prepared. Like I said, we could have some stopping points along the way. It could be any of these timescapes. It could be this lower low right here. But I would be prepared, have a plan for going as low as the 2021 top at 69K. Hope that answers your question, Mr. Nobody. Did I buy Bitcoin at the yearly open? I damn sure did. I started buying, like I said earlier, maybe you missed that. I started buying back in 2020. This particular position that I've built, I have started building this back at the FTX crash here in 2022 at 15K. In full disclosure, I have a tiny bit left from that, right? I thought we were going to go lower. I thought we were going to go down to 13K. So I started selling when we were up at like 18, at 18K, and just held on to a little bit, and then things took off. So I held the rest of what I had, and I've added to the position really in most of these consolidation levels. I was a little late here at the 25K mark because I thought it was just another bear market rally, and then we shot out of this. So yeah, I got a little bit in that 25 to 30K range, and then added a lot, around in this range. And a little bit more, and a little bit more, and a little bit more. So yes, I did buy the yearly open. And as I said earlier, I'm holding everything that at least my position on it right now is that I'm holding everything that I paid less than 100K for. So each little Satoshi, that I came in at what I think will ultimately be a generational price. I'm holding on to for the long term. That's pretty much it from here. Okay. If there's anything else you guys have, again, you can always find me on X and in the Telegram chat. And now I am contributing for CoinMarketCap too. So you can find a material indicators channel on CoinMarketCap too if you engage in that platform as well. And I'll probably be adding a personal channel over there as well, and maybe even getting into some other platforms. I'd be interested to know if you guys are engaging in any of the other any other platforms for your crypto content, like Farcaster or Blue Sky, or TikTok or anything like that. So far, what I've seen, I haven't seen a whole lot of great value on with a little bit of looking around that I've done. But this is where I find a great audience, and I'm glad to have you guys with me. So here's what we're watching. This trend is literally being decided in real time right before our eyes. And again, don't jump to conclusions. It's weekly closes, I think, that are going to be more significant here. And of course, the monthly will matter too. But we got to get back above this level to have any chance at reclaiming the bull trend. All right, gonna leave it right there. Hope this data helps you trade smarter. And if you're interested in any of the tools, be sure and check us out. Links are in the description. And of course, you can find them on materialindicators.com. And just a little heads up, huge holiday sales coming your way very, very soon. Really on everything. So certainly for all the material indicators tools, but if you use platforms like TradingView or 3 Commas to automate your trades, those guys are going to have big Black Friday sales coming up very soon. I mean, like big time, like 50 to 70%, depending on what platform you're on and what plan you get. So I would be getting ready to take advantage of those deals. I have links to those in my description as well. You'd help me out a little bit. I might get a nickel for some of those. So if you are interested, please do me the favor of clicking on the links in my description down below, and That would be greatly, greatly appreciated. All right, going to leave it right there, my friends. Hope you guys have a fantastic night, and hope you trade safe and trade smarter.